Welcome back to Mid-Cap Radar. As promised, RBL Bank says it intends to grow its credit card portfolio at a modest 12 to 15% range compared to the industry's 25 to 30% growth rate in the segment. Bikram Yadav, business head of credit cards at RBL Bank, spoke with my colleague Ritu Singh on their business momentum and growth outlook. Listen in to the excerpts of that conversation.
As we have been stating that for last 18 months or so, we have been working on a diversified distribution channel for our growth ahead. Within which we have decided that first thing that we have done is that we have built up our own sales network in our branches and on our direct sales process. We have also done multiple co-brand partnerships so that we do not have concentration risk in our sourcing of cards.
Okay.
Now, we are a fairly large issuer with about 5.2 million customers. We have seen a product stack in which we have multiple co-brands and multiple offerings in bank branded cards also. There was a gap on a fuel co-brand.
Okay.
Fuel is a rising consumption category with disposable income and affordability increasing and people consuming fuel at an increasing rate every year. So we were looking for a fuel co-brand partnership. We spoke to Indian Oil. They are the largest fuel retailers in India. And then we signed up this deal where we'll bring significant value to our customers and loyalty for Indian Oil and a large access to us through their distribution.
So with all of this expansion, what is the share of your largest co-branded partner come down to?
So, see, progressively what we are looking at is that we should not have heavy dependency on only one co-brand partner.
So now it is at?
So now we would be, we are already moving about 50-50.
Okay.
And in a progressive manner, we would taper it down further.
Should we assume the partnership continues till 2025 as originally signed?
As I'm saying that, this is one thing which we will not comment because it is in regulatory ambit and it's a discussion between co-brand partner and the regulator. So it's not for us to comment on it.
RBL Bank has come up in the credit card space fairly quickly now at nearly 5-6% market share in just a 10-year period. What are your aspirations here? The book has already grown to a third of your total retail business. At what pace do you expect this to grow?
So we indeed started our credit card business in 2014-15 and through our differentiated strategy we made space in this category. We are about 5% of market share. We would continue to grow in a moderate basis. So for credit card infrastructure to work efficiently, you need a minimum scale. That scale we have already reached. Now we would do more with our customers. So our focus would more be on doing more banking products with them, driving engagement, driving unitary economics, doing more with our customers in terms of other loan products like home loan, car loans, doing deposit relationships with them. So it is going deeper in the base rather than expanding the base rapidly. We would moderately continue to grow in range of 12 to 15% and industry is growing at about 25-30%.
All right, that's the word coming in from the management of RBL Bank. With that, let's move on to an important story.